Hey, 10 o'clock on the dot. We're going to give it about another minute before we kick off. Can you believe it? Friday, spring is here, sun's out, guns out, buns out. We're going to have a great Friday morning together. We're going to give a few minutes for more people to just make their way into the webinar room. So in the meantime, please say hello in the chat. Let us know that you're here. Let us know where you are connecting from. And we are going to get started in about 1 minute. We're just letting in the last few people. Thank you to all of the early birds for arriving early and on time. We absolutely love and appreciate that. We're going to keep it going for just a minute or so before we kick off. Portia's in the room, looking lovely as always. We have Mr. Mokoka in the room, looking good again. We're going to have a great Friday together. Webinar 4. We are starting in about 1 minute. In the meantime, please say hello in the chat. Let us know where you're connecting from. Portia and I are going to do a couple of shout outs before we do our official greeting. So far, who do I see? Who do we see? We see Tefo in the room. We see Simon in the room. Portia, who do you see there?
I see our guest Mike, and then I see Ivo from Assisa, and I think there's Tifo. Hi, he says good morning, good people. Thank you so much, Tifo. And then there's Tabiso. I know these guys like to come in early. Thank you guys for always just joining early. And then there's Koliswa. Hi everyone, Koliswa from Carltonville. And then
and Kwabani is also in here. We also have Tabo Nkosi. We have Clau. I think Clau was the first one in the room this morning, all the way from Centurion. Barbara's in the house as well. Nomsa from Bushbuck Ridge is in the house. And of course, McDonald, I'm loving it. He's in the house as well. All right, I think we're just about ready to begin. So without further delay, let me greet you all and welcome you to another amazing session we have lined up for you. Webinar 4 of the L+EARN BIZ program, brought to you with absolute pleasure by the Assisa Foundation. My name is Darren August. I'm sure you guys know me by now. I'm your facilitator and host of this particular webinar, and I'm not alone. I have my learned and esteemed colleague, Portia, in the room with me. Portia, do you want to quickly greet and say hello?
Morning, guys. I'm happy to be here again. I can't wait for this session. It's going to be very interesting. Thank you.
So you guys, can you believe it? We are just about halfway through the program already. I feel like it is flying, and I'm sure you would agree with me as a business owner that we are learning so much every time we get together in this amazing forum. And so before we continue, really just a big shout out and a big thank you to the Assisa Foundation for bringing this particular webinar and this whole series to all of the entrepreneurs who have the privilege of being part of this program. Today's webinar is actually very, very special because it falls in the middle or as part of Money Smart Week South Africa 2022. And so for those of you who may not have heard about Money Smart Week South Africa before, it is an initiative that is a financial education awareness campaign, and it's really intended to just inspire South Africans to make better financial decisions. It was started in Chicago in the USA in 2012, and so every year a week is set aside for Money Smart Week South Africa, and this year it's been held from the 29th of August to the 4th of September, and so we are literally still in that period. So there's many financial education campaigns happening right now all across South Africa, and so the Assisa Foundation is a proud participant of the Money Smart Week South Africa, and so today's L+EARN BIZ workshop is brought to you both by Money Smart Week South Africa and the Assisa Foundation, and the theme this year is Build Your Future, Be Smart About Money. And so some key campaign messages for Money Smart Week South Africa this year, and I want to read through them so that we all just really absorb it. But it's bringing financial education to you, learn how to get informed financial advice from qualified professionals, and then also everyone is affected by finances. That's a very important theme of this week's or this year's Money Smart Week. And of course, take control of your finances, safeguard you and your family's future. And one financial literate person in a home can influence an entire generation. That's a song we've been singing as part of the Assisa Foundation programs for the longest time. And so we hope that you enjoyed this L+EARN BIZ workshop and join many other South Africans who are also participating in Money Smart Week South Africa this year. All right, so as I mentioned earlier on, we are about halfway through the program already. And so it is a great achievement that you're still in the program, that you've been attending on time and every time that they've been scheduled. So today is webinar 4, where we're going to be talking about financial recording, costing, and goal setting, and then just some of the other webinars to look forward to in the coming weeks and months ahead, as we're going to do financial calculations and margins. That's towards the end of September, before we get into credit management, savings and investment, mental health and finances and scams. And then we're going to get into marketing, where we're talking about literally marketing your business. We're going to revisit the business model canvas. We're going to talk about financial interpretations, compliance, funding. And then, of course, webinar 9 is the one we're looking forward to, where you are going to be doing your presentations on your businesses. And so just a reminder that we are now at the halfway point. There are some great incentives as part of the program. And so please look out for Nokupila's communication, which will be happening pretty soon in the next couple of days and weeks after this webinar. And some busy bucks are going to be coming your way. I know she's been managing the leaderboard, managing who's been doing all of the assignments and submitting assignments. And so incentives are coming your way in the near future for participating and engaging in this webinar series. Now, you'll remember the last time we connected was webinar 3. And we spoke about separating personal and business finances. We went into depth with the business model canvas, and I hope that you've started implementing it in your businesses, because that was an amazing session. And so we are looking forward to today's session. This is what we can look forward to today, guys. We are talking financial recording. We're talking goal setting. Obviously, we've got quizzes. Then we're going to talk a little bit about costing for your business. And I know Portia's got some amazing things up her sleeve when we get to that section. We've got our guest speaker, Mike Mokoka, in the house again. We are so proud to have him back, and we're going to welcome him a little bit later. Such a wealth of wisdom. Really, really going to be sharing some good nuggets with us again. And then we're going to be talking about goal setting in our breakaway activities. And we will have some announcements, take our pictures, and then we will be out of here. Very important, when we get to the breakaway room activity, in fact, you would have received those notifications already, and you will then simply go to the breakout room that you have been allocated to. And then please make sure you stay until the very end, because today's webinar will end a little bit differently. We have a survey that you have to complete at the end. And so when we end today's webinar, a survey will pop up on your screen, and you will be required to complete a survey. All right, Portia, over to you for some check-in questions on today's topic.
Yeah. Morning again, everyone. You're welcome to this wonderful session. So I'm just gonna do a check-in just to see if people understand what financial recording is all about. As you know, you can raise a hand. I'm just gonna ask just 3 or 4 people just to tell us what they understand about financial recording, and also what is costing. So let's see the hands there. Darren, you can help me if you see hands.
Okay.
So what do you understand about financial recording, and what is costing?
Okay, good morning. Financial recording, it is recording each and every money that comes into your account, or that you make in your business. Yeah, I think that is the answer. Thank you.
Okay, and I see Nomfundo is saying, I think financial recording is all the business cash flow activities. Yeah, definitely.
So let's get into today's topic, which is financial recording. A very, very important topic when it comes to financial, when it comes to business, starting and running your own business. And so keeping financial records is absolutely crucial and a very important part of your business, because you need to personally understand your financials to effectively manage your business and to ensure financial sustainability. It's not good enough to just outsource it completely to somebody else or a third party. As a business owner, you need to keep your hand on it. You need to keep your thumb on it so that you know what's happening in your business. And also very important to realize is financials provide information to investors, to lenders, to ascertain whether a company is profitable, and also just to evaluate your business. And so when it comes to things like applying for funding or applying for loans, very, very important that financial records is what institutions look like when they're wanting to partner up with your business.
Yeah, accounting is basically a process that you use to record, organize, and classify business transactions, such as your sales, which is your income, and expenses are arranged in a certain way that enables us to keep a record of what has been happening in our businesses. So it's helpful actually to have a basic understanding of how these statements are prepared. You must also know how to read, understand, and make decisions from the information in these statements. Like Darren said, I know that some of us are like, oh, accounting is difficult. I can't do this. But if you're running a business, it's better if you know just the basics, just the little basics. Okay, I know what is coming in, I know what is going out. Even if you've got a person that can help you with the books or an accountant, but I think it is important to have that little bit of knowledge of accounting. Yeah. And then we can look now at the process. You'll see that every input, when there's an input, there'll be a process. In that process, that's when you are putting in your transactions and whatever, and then you get the output. So Mike is going to explain in detail. Our guest speaker, so he'll explain in detail how that is so important. So let's look at maybe, and so that you can understand the accounting process, let's look at the source documents that you actually need to generate in your business. And I know a lot of people, sometimes they just, they'll write things down, but they don't give the customer anything. And I always say invoicing, receipts, quotations are very important. So we're going to talk about invoicing for now. An invoice, it's something that you give to a client, and usually you have to generate it. You write it down and give it to a client, or you can even use things that like stationery that you get from other shop that's already written. All you do is just put dates and the amount of money. So once the product has been delivered or you have rendered a service, you must issue your customer with an invoice. So if you are VAT registered, invoices are to be set up in a way that is obviously required by SARS. And what is important to note is that your invoice should have a date. I've seen invoices where somebody sends an invoice and there's no date. There's no invoice number. So you must have an invoice number. The details of the customer is very important, or your client. Also, what was the product that you sold, or what is the service that was rendered, and obviously the amount concerned. So the amount of how much are you charging that person. So that is very important. And then we've got a receipt, and then this is when the customer pays over money as per the invoice. A receipt is issued to the customer showing only the amount that was received from that customer. And then I know for a lot of people who are rendering services, every customer will always ask you, can you send me a quotation? And then people are like, oh, what is a quotation again? A quotation, it's a document that the seller provides to a buyer to offer goods and services at a stated price, under specified conditions, of course, also known as quotes, sales quotes, or sales quotations. Quotations are used to let a potential buyer know how much the goods and services will cost before they actually commit to the purchase. And I know there's a lot, usually most companies have got a rule that if they want to buy something, they'll ask 3 quotations from 3 different companies. Why do they do that? They want to get the best price.
Maybe before we move on to the next slide, so something to throw in while we're here is these days, guys, there are so many even free apps that you can download if you have a smartphone that you're able to actually record and report on all of these, where you literally can create a quote, then invoice, and then send the receipt to that customer after you've done business with him. So that's just something to throw in there while we are talking on that topic. Then, of course, there are source documents that third parties will issue to your business if you are in business with them. Portia, do you want to unpack that for us?
Okay, because it's not only us generating source documents for our customers, we also receive documents. So we usually receive things like invoices and receipts. There is paperwork which is received from a supplier, which can take form of a cash receipt or an invoice. And if you're paying cash on delivery, you will often only receive like an invoice which indicates payment received. And then this document serves as both the invoice and the receipt. And then the one that I think all of us receive, it's our bank statements. That one is obviously sent by your bank. Your bank will issue you with your bank statement or your credit card statements. And if maybe you've applied for a loan, you'll obviously as you pay, you get a loan statement that tells you this is how much you've paid, this is how much you still have to pay. It shows you the balances and all that. And then we get account statements. I know if you order goods, maybe on credit or 60-day to pay, 90-day to pay, what you'll do, a statement of account is a document that reflects all those transactions that took place between you and your particular customer for a given period of time. So you can also receive that from your suppliers. Generally, business owners send statements of accounts to their customers to let them know how much they owe for their sales that took place on credit during that particular period. Yeah.
All right, the next, let's quickly pause there for a moment and see if we do have any questions. So I'm going to open up for just 2 or 3 questions and see if anybody has a question on anything we've just spoken about as far as documents, source documents are going. So 2 or 3 questions quickly. Portia, if you can just check if there
I
are
think
any
I see Dumeleng.
I was just like, I wanted to comment on terms of like recording. I've recently tried to do like financial projections for my business, 3 years projections. So I found myself struggling. I was like, okay, I know the basics, but then for me to put into like practicality of putting like projection for 3 years, I was like struggling. So I think financials is still something that I have a long way to go with for now.
So is your business running already, Dumeleng? Are you making money? Is money coming in, money going out?
Yes, there is money coming in, money going out. So like there's other programs that are coming where you will be able to like apply for grants and so on and so forth. So they want these things. So I was like trying to juggle around and see if I can get myself prepared for those kind of things. But I was like maybe able to do the first year and struggle a bit with the second year because of not being like certain of is it realistic enough or not.
Yeah. No, I think what we'll do, I think because you're going to need a one-on-one assistance with that, maybe let's wait for a coaching session. I don't know which group do you belong to, A or B?
I'm in B.
Okay, so you're going to have to talk to Nokpila about that, all right?
All right.
Just please, and then maybe she can advise you what to do, because it's not a difficult thing, especially if you've got the year 1 financials, then it's easy to actually project for the other 2 years. It's not difficult.
Okay.
So, all right. I think Nelly Siwa wrote something there. How do I go back and record transactions that I didn't keep receipts? Yeah, that's an interesting one. If you don't remember, and you can't remember, definitely, it's a lot of transactions. You're gonna just have to start the new habit. Do it, because you can't get that information unless it's transactions that are banking. You can go back because it's there digitally. And then, but if it's things that you were supposed to record and you didn't, I think you've lost that information.
I'm sure our guest speaker will unpack that a little bit more for us a little bit later. But let's continue for now. So let's see where we're at. Okay, so next up, we're going to talk about goal setting. And so goal setting is a process where you develop an action plan. All right, very important. It's an action plan that will motivate and guide you on the steps that you need to take to achieve a goal. And so in order to achieve what we want to achieve in business, or as well as our personal lives, because this is in business and personal lives, we must set goals. And so just setting good goals doesn't equate to much unless we have a plan that will ensure that our goals will be accomplished. And so I'm sure you would have seen this before, but it's not totally new to us, but we're going to break it down. But so when it comes to goals, we have to set SMART goals, all right? And so the acronym up on the screen right now is SMART, which relates to goals. And so that means your goal has to be specific, measurable, attainable, relevant, and time-bound. Let's unpack each one. So when it comes to specific, all right, the goal has to be something that is precise, all right, with no room for misinterpretation. If this is the goal, it has to be clear. You have to be able to speak about it clearly, and there has to be no confusion about what the goal is. Then the second one is measurable. And so the goal has to be quantifiable. The progress should be easy to track. You need to know, how am I going to measure whether or not I am on track with this goal? Then the third one is attainable. And here, as much as you are encouraged to dream big, as much as you are encouraged to aim for the moon and land among the stars, it has to be attainable. And so it has to be realistic, all right? It can't be outlandish, unrealistic, and impossible to achieve. So as much as you're dreaming big, it has to be realistic and achievable. And then, of course, your goal needs to be relevant. So it needs to contribute to your broader goals and your overarching goals, your complete vision of where you are trying to go, not just with your business, but even with your personal life. And then, of course, the last one, the T stands for time bound. And so there has to be a start and an end date, okay? So the goal can't just be, I'm going to do this, and we don't know by when you're going to do it. It has to be time bound. And so we need to know, when are you going to start? When are you going to get there? And how are you going to get there as well? Portia, I know you've got a great example you wanted to talk to about this.
Yeah. But I also wanted to just say that, if you don't put like like you just said, time bound, you are not encouraged or motivated to actually achieve or finish that goal because you didn't put the time. So it's very important, even in projects, people put those deadlines so that they're motivated and they're encouraged to actually complete their goal. Yeah. So let's look at the example. There's a weak goal example here that I'm going to make. If you say, I'm going to grow my business, it's okay. All right, everybody can grow their business. What? How? So it's just, so you need to be specific. This person is not specific. We don't know what business he's going to start. So when we're doing SMART goals, we're going to have to be specific. I'm going to hire a cashier and an assistant. An assistant to assist customers while I manage the business. Can you hear how specific that is? That way I can free up time to conduct product research and add new products to my store. This person, if you're talking to someone like that, you understand what they want to do. All right, measurable. It says the goal is to hire a cashier, assistant, buy a cash register, and add 5 new products to my store. Can you hear that? So by the time there's 5 new products, then we know that, okay, we can measure now that the goal has happened. So that's measurable. Then achievable, I have some experience running a shop from my previous job, and I understand how to find winning products. I know 3 people in my network who need a job. It's achievable because she's got experience. She's done this before. As much as she's starting a new business, but she has experience in actually selling and finding new products because she was doing it in her own job. So it's definitely achievable. All right. And then relevant, I aim to work on my business, not in my business. All right. On my business, not in my business, so that I can grow my income and work less hours. It is relevant. All right. Then time bound, I will hire a cashier assistant within 2 weeks and then add 5 new products to my store within 1 month. So we know that in a month, this should be done. So she has already put that in a month, it's going to be done. Hiring the person, adding those new products. So she's got a date. So all she needs to do is to take the little action steps to actually get to that, the goal. So you have to be specific, measurable, achievable, relevant, and time bound. Yeah. That's it.
I love how you broke that down and really made it so specific. Yeah. And that's what we need to do as business owners. And so this is one of those that I think you will obviously receive this example, but it's such a great way of how you break down those goals. So well done. Thank you, Portia, for sharing that with us there. Guys, let's get into the first quiz that we have for you to complete this morning. So team, if you can put up the quiz, the survey or the quiz will pop up on your screen right now. And there are 5 questions in the quiz. All right, so the quiz is up on the screen. Make sure that you answer all 5. There are multiple choice. Make sure you scroll all the way down to the bottom and then click submit. I'm going to give it about a minute or 2 for everybody to complete the survey up on the screen right now. While you're doing that, there's a great comment that came through from Pauline saying most of us work in our businesses instead of working on our businesses. I think that's something that so many entrepreneurs and business owners fall prey to and fall into that trap. Would you agree, Portia?
Yeah, I think I also struggle with that. I think I was talking to someone about that. Like you are always working in the business. And then the things that you plan to do to actually grow your business or improve your business, you never get to do them. So I think we need to find some balance. We are small businesses, it's going to happen, But as we grow and we get assistance and, the burden is off, you start working on your business, yeah.
Absolutely. All right, guys, looks like quite a number of you still need to complete the survey. So Portia and I will be quiet for the next minute and give you time to, maybe the questions are hard. So you've got about another minute just to complete that. 5 questions. Make sure you answer all of them. Scroll all the way down to the bottom and then click submit. And then of course you can type in the chat and say done, like everybody is doing right now. Nice one.
I see Gift says, all thanks to D4, I have a logo and an invoice now. My business will start going on the right path. Oh, thank you so much, D4, for helping Gift. Interesting.
Beautiful. I think let's keep reading some of the chats. Here's a great one by Barbara in the chat saying, even the top corporate managers have to constantly be aware of spending their time on the 20-80 rule. 20% time working in and 80% time working on planning, strategy, and such like. It's so much easier to be caught up in the daily tasks. So that's very good advice there.
Yeah.
80-20 rule. So 20% of your focus should be on in your business, 80% on your business.
Yeah.
Thank you, Barbara, for sharing that.
Great
A few
stuff.
of you still need to complete the survey. If you could make sure that you've answered all 5 questions and then click submit.
Yeah, by my understanding, I know that a quotation has a duration of time due to in your business when you have when you change your let me say your prices, so that someone cannot come with an old quotation, so it must have a duration. Is it?
It is, yeah. So you can write it right at the bottom, like a TNC. You know, when you have like a TNC at the bottom, can say that this quotation will expire in 14 days.
In 14 days, yeah.
Because prices may change, remember?
Yes, prices may change, so that a person mustn't come with an old quotation, or else your prices have changed. It will be an issue at the end of the day.
Yes.
Okay, I was just adding on that.
Yeah, and I think also maybe with Darren, the other thing I'm thinking, even with invoices, you know, maybe as we are giving people our invoices, we must have that TNC, like for payments. Can maybe say 7 to 14 days payment period, you know, so that you are paid on time. Also mention that. Yeah.
Absolutely. Beautiful one day. We'll get into more of the questions a little bit later, but that was such a good point. I literally had that this week where I had quoted somebody in February. They came back in September and are expecting the same price. And so thank you, Tabiso, for that reminder. I'll definitely make sure I keep a tab on that going forward. Let's move on. So guys, the next thing we want to talk about is costing as far as your business. And costing is important because you need to ensure that all expenses are covered so that you can actually make a profit. And so the first and most important step to identify all the costs in your business, all right? Production costs. That is, what does it actually cost to produce this product? Then, of course, there are sales costs, right? There's administrative costs, there's overheads, and you need to take all of those costs into account. You first need to know what your fixed costs are. So fixed costs are what is specific costs that don't change, and then you get variable costs, and those are costs that change depending on circumstances, depending on time. And so depending on the product or service offering that you have, you need to have sales targets of how much of that product or service you have to sell in order to make sure that you cover all of your business costs.
Yeah.
So why is it important? Costing is important. And as you can see on the screen here, it's so important that you know why costing is important. Portia, tell us a little bit about why it's important to know your costing.
Because you wanna know if you can make a profit. So if you're not costing, how are you gonna know that you're making money or not? And I think the first and most important step is to know how to identify all the costs of a business, your production, your sales, like Darren was saying, and you have to know your fixed and variable costs, or other people will say direct and indirect costs. You know, direct costs are those costs that can be connected to a specific product. Like if somebody's baking a cake, I always say, explain my example, the easiest example. If I'm baking a cake, the lady that I hire to actually be the baker, her salary and the ingredients of the cake and the stove that I'm using, those are direct costs because they are tied to that product that I'm making. And then you get your indirect costs, which are expenses that are involved with maintaining and the running of the business. I'm going to go and buy the flour. I use transport to get there. That transport cost, that expense, it's an indirect cost. It's not connected directly to actually making that cake. So as a business, you need to have a very clear understanding of how to set pricing, you know, and also how to classify your cost correctly. So you need to know, and businesses are different. someone's direct cost might be my indirect cost, you know, so it depends on the business, yeah. But if you don't know those costs, it's hard to actually start to price your product, you know, because you need to understand the cost first of making that product, like you were saying, Darren, and then put the markup on those costs to actually get your selling price. Yeah. So I always ask people, you know, somebody says, I'm making a sauce, it's 250 mils. I'm selling it for 120. I'm like, how did you get to that cost? But then my question is, how much does it cost for actually you making that product, that 250 mils? And you find that people don't know. And I think with cooking and products, food, it's worse. You need to understand how to measure these ingredients and translate that into money, an amount of money. How much does it cost me to actually take 2 spoons of flour and put them into this mixture? So people need to know how to do that so that they understand the cost per product or per unit. Yeah.
I'm sure everyone on the webinar is starting to realize Portia always has her favorite examples. She always talks about cakes. She always talks about baking cakes. And the other example that Portia always loves to talk about is hoodies. So give us the example here. I know you've got an example of a hoodie business. Take us through and just demonstrate for us what we've just spoken about.
So you can see that's my hoodie. Actually, you can see it says Portia's hoodies. So I'm selling these hoodies, beautiful, colorful. People like them, they're funky. So I'm just going to make an example with that. Like Darren says, I'm like an auntie, you know, always make these simple examples. Yeah. So let's make an example. Let's say your variable costs are 6,000 Rand and then your fixed costs are 8,000 Rand. And please remember the fixed costs include your salaries too. I always say to people, please include your salaries here because I always hear the story of I am not paying myself, you know. I broke even. So you broke even, but you didn't pay yourself. So I'm feeling like if you're breaking even, can you please at least include that salary so that you can be motivated and be able to wake up the next month to go sell more hoodies. All right, so let's look at that example. We said variable costs are 6,000, fixed costs are 8,000. So our total cost for running my business is 14,000. So the cost price, so we must have the cost price. So I buy or to make these hoodies, it's 70 Rand. It costs me 70 Rand. Selling price, I sell them for 112 Rand. Why I came to the 112? It's for this reason, because I knew that if I sell, I can sell 125 hoodies. So how much is my markup? Let me say I put 60% markup. All right. If I put 60% markup, I'm going to sell it for 112. So for me to break even, I would need to sell 125 hoodies so that I can break even and cover my costs of 14,000. But if I wanted to sell more and make a profit, I would have to sell, my sales target would be 150 hoodies or 200 hoodies or 300 hoodies. But for me to break even, I need to sell 125 hoodies. But then I always say, you know, if I'm making this product, I could actually also just add a markup of 100%. Then if I had add a markup of 100%, it means I would need to sell how many hoodies? 100. Because then if I sell 100, I'll cover all my costs. So I can change that markup and say, I'm going to sell this at 140. And then all I need to sell is a 100 hoodies. But if I want to make more, then obviously my sales target must change. And you see, it's nice when you're costing because what you can make informed decisions because you understand your cost. And you can even create a sales target. Obviously, that's supposed to be, what's this word? I want the word that thing I was using. Darren, achievable. Yeah. Obviously, your sales target must be something that's achievable. You're not building a skyscraper. I'm going to sell 1,000 hoodies a month. So, but if you can sell the amount that can cover just your costs, you know, for your business, your total cost of the business, covering your indirect and direct costs, then you are on the right path. Yeah. So that's how costing works. And then I think what we're going to do, we have a costing sheet that we use. What we're gonna do, we're gonna send that costing sheet to you. I know sometimes it's tricky because businesses are different. So the example might not be maybe correlate with what you do. So, but I think what you must do, we'll give you the costing sheet, just try and use it and see if you can be able to actually cost your products and services. And I know with services also, it's tricky because there's a time factor But I think what we can do, if you've got an issue and I have to talk to your coach, guys, make sure you attend the coaching sessions, because that's where we're going to deal with you one-on-one to actually talk about costing, how to price your products. Yeah, that's how it is, Darren. Maybe people can ask questions. Yeah.
Great. Tabiso, we see your hand. We'll come to you now, but I want to read just 1 or 2 comments in the chat, because it seems like this issue around costing is quite an important one. So let me start off with Nomfundo's comment. She says, I recently undercharged a client. I only realized when I went to buy fabric for her dress. The fabric was very expensive, much more expensive than I anticipated. Literally all the money she will be paying is going to just cover material to produce the garment. And that's something that so many entrepreneurs or business owners make a mistake of by not costing correctly. And as a result, you literally end up losing in that transaction because you deliver the service at your own cost. Then a great comment here by McDonald saying, a note on costing. So costing your product or service depends on several factors, including but not limited to production cost of the product, quality of the product, standard market rates, etc. And so if you sell printed t-shirts and your competition sells them for 300, you could make a comparison with regard to the quality of the t-shirt and then price from there. That this obviously will also depend on production costs and other factors. So very important that you know what you are putting in so that you're able to compare. So it's not always a case of, oh, there's someone cheaper, so now you need to match the price. Sometimes the fact that you have a higher quality product allows you to be able to negotiate and give you that power to possibly raise your prices.
And sometimes you find that your indirect costs are higher than your competitor. So you cannot be charging the same. Yeah. So, yeah. And then the other thing, Nomfundo, I wanted to say, Darren, with Nomfundo, I think also we get pressured. The client is sitting next to you and they want this address. You're not obliged to actually give the client the quotation there and there. Leave the client, take what he's given you, go out there and go look how much is everything, and then come back and write the quotation for the client. I think sometimes we feel the pressure, like we need to give the person the price right now. Yeah.
Okay, let's get into a quiz for costing. Team, if we can put up the quiz. Quiz should come up on your screen right now. This is the quiz relating to costing. If we can launch the poll. There should be 4 questions in this one, and so it's up on your screen right now. Sorry, there's 6 questions. 6 questions for this one. And so if you make sure that you answer all 6 questions, scroll all the way down to the bottom before you click on submit.
Hi everyone, I just wanna ask a question. I wish I could type, but I can't. Like I've been in a situation where I've been told over and over and like that I can't charge. Like for instance, my business, I'm crocheting. I'm the one who's doing the crocheting. But then sometimes when the order is too much, I get someone to help. Then I pay those people like per item that they make. So I figured that's how I can charge like for labor costs. So, but then for me, like seeking advice on how to do my pricing, I was told to exclude the labor costs. For instance, if I'm the one who's doing the crocheting. So I don't know if that makes sense or not.
You are making it. If you're not there, the product is not gonna come out. So you need to cost that in. You need to cost, because how are you gonna pay yourself? You know?
So are you saying in that case, Posa, she is the laborer for all of the ones that she makes personally?
Yes. She's still a laborer. She's working for a business. And she needs to be paid.
Makes sense.
Yeah.
Okay, thank you, Pasha.
I see, Ngobane. I know that, you are right. Transportation, I know I've got a friend of mine who does this. She's always complaining. So I think maybe it's the volumes. For me, she says that it's maybe how much you put on the truck. Maybe get a big truck and load a lot so that you're transporting a lot at one time. So that as much as the truck is 15,000 to actually transport those goods to the depot or wherever you're delivering. So maybe have the volumes, like if you have a big truck with a lot of collection that you've collected, rather than having little amounts of waste. Yeah. So if you have a big truck and you've collected a lot, then you can minimize your costs.
Okay, so let's wrap up the quiz quickly. We can end the quiz. If you haven't if you're having an issue with that one question, you can just ignore that question and click submit, and that should work. And then let's take the quiz down, and we are going to move into the next segment. So give me 1 second. I just want to take this quiz off my screen so that I can introduce our guest and do justice to this great profile. So Mr. Mike Mokoka, he joined us 3 weeks ago at webinar 3, and what a sterling job he did. So passionate about really helping upcoming businesses, small business owners to just manage and grow their financial well-being. Strong financial management background, tax background. We know he answered some great questions. And also he's been doing this for over 2 decades, guys. So you're getting 20 years of experience on these webinars, NGO sector, construction, manufacturing. So just such a wealth of experience. Mr. Mike Mokoka, thank you so much for joining us, and welcome to today's webinar again.
Thank you very much, Darren, and thanks to all the participants of the webinar. I think a nice spring day. Spring is here.
Absolutely. I think we can sense in the atmosphere that the better days are ahead. Winter is over. Portia, so if you can just help keep an eye on the chat. Guys, if you do have any questions for our guest speaker today, please type your questions in the chat. But I'm going to kick off with a couple of questions that we have. So, Mr. Mokoka, as an expert, how would you emphasize the importance of especially financial recording?
Yes, thanks, Darren, and thanks all. The importance of financial recording, it cannot be overemphasized, because as I've said previously, to measure something, you have to have a record of it. If you want to measure a road, you need to get a record that from this, a distance between Polokwane and Pretoria is so much. You have to have a starting point and know where to end. So financial recording, in essence, is a story, is a snapshot of your business. So everything that happens in the business must be recorded so that you can reflect back as a business owner and check all the transactions happen in the business, so that you can also analyze the business activity. And when you analyze the business activity, is where as an owner you're gonna check that do I make profit? Do I at least, or maybe the business in trouble, what do I need to adjust? What cost do I need to cut? So it helps also with the cost control. What do you call the cost control? I'm happy this segment were clubbed together, because financial recording, the essence of it is about checking and monitoring the business activity. And one of the basic things is cost control, where you have to control the cost, so that you will know that whether you are going or coming. So in essence, financial recording is what in accounting, sometimes we call it a double entry system, where every debit is gotten a corresponding credit. So hence we have what we call a balance sheet that always balances, because an accounting equation is what you have put in, is your assets are equal your liabilities plus your owner's equities. You see, because liabilities is what you owe, equity is what as a business owner you have put in. All of those combined must be equal your assets. That's where the double entry of bookkeeping comes into play. So it's a process of putting all your transactions when you go to spend. And I want to emphasize that one of the things, the catch of today, you must know that cost goes before profit. You cannot have profit before cost. So they must know that is the cost goes before profit. That is the basic thing. So they must know that, okay, whatever input, when I get the expenses, I must record them, so that at the end of the day, I'll be able to measure it against my income, whether am I profitable or making a loss. So that is the essence, the importance of recording. it cannot be over. It's the basis of analyzing your business activity and also internal control. You see, you have to have internal control of your business to know that, okay, we have recorded this recording, this expense really did happen, you see, in the books of the business, so that you can always look back. Somebody was asking, there was a question earlier that, can I always go back and record those transactions that I've never recorded? Yes, sometimes you can go back, you can post adjustment journals, but as long as you can go and prove them, because a financial statement, which it will be derived from the financial recording. From your financial recording, you'll get your financial statement and your balance sheet and all other balance sheet and income statement. So to get that, you can there's that one of a profitability income statement and a statement that you do for tax purposes. So those two, they must know that are different. Yes, you can go back and record it, but as long as, because you don't have source documents, you can put it under the unallowable, because if SARS come back, you cannot prove that when they do an audit that transaction did take place. But as you know, maybe you can use your bank statement. If you did purchase through a card or an EFT, use your bank statement as part of your source document, as a supporting source document, that you track back your transaction. Also, such a date, I bought with a card, so this is a transaction. But sometimes you cannot get the benefit if you are registered for a VAT, if you don't have a valid invoice. So you must not claim VAT back.
I think that brings it to our next question, which was, and you've just started touching on it, which is actually, why is it so important to have source documents, and why are source documents important in our businesses?
Yes, source documents are for the purpose of internal control, in order to prove that the transaction really occurred. It tell you, source document is got a date. Like if you buy something, you receive an invoice which tell you, or a receipt tell you, on such a day, this is what happened, and then that source document, you're gonna record it. It's gonna be your source document to produce that financial recording. You're gonna record it so that you'll be able to produce your financial statement. So it also assists in preparation of financial statement, as I say, because you input, as Pochi have shown there when he says that you input and there is a processing that come and output. Output are financial statement, which include the balance sheet and the income statement. So source document, without recording, without source documents, you cannot record transaction. And then there will be poor internal control. Internal controls as an owner of business is just to ascertain that this really did take place. And source documents, sometimes they need approval, so that you can always go back that, okay, this expense, I did approve it. And you can also track versus your spending, your actual versus your budget. Whether are you still spending as per your budget that you have done, your forecasted budget, that, okay, this year, my expense, like maybe my stationary expenses need to be 3,000 Rand. Am I still within? Or maybe for the month need to be so much. So it helps you with that, and also costing, so that you know all your expenses that you have incurred and your overhead costs, so that you can be able to cost your product accordingly. Because without source document and recording, you can't really have that. And it also, source document also help with when you prepare for audits, and those also you must apply to a bookkeeper in order to produce financial statements, and also help you with the SARS audit, because one day SARS will come knocking, and the basic principle is that the principle SARS is a rule, it's not, it's a regulation. You must keep those documents for 5 years, because within that 5 years, even in 3 years, they can come back and say that go 5 years back, prove that you did purchase, that purchase did really occur. So you must be able to produce that invoice or that receipt to prove to SARS, yes, I did really incur this such of an expenditure. You see, so
Gotcha.
it's very important to have source documents.
Would you say that a business could fail because of not recording or because of no financial recording?
Yes, the business will fail. Imagine you don't have a recording, financial recording, you don't have source documents. And then with the recording, you can know that what is your liabilities. You see. So your liability is like accounts payable. It's always, and also, what are your assets? What needs to come in? You see, your debtors that you need, the money that you need to collect, the income. You see, you have raised an invoice because there is no recording in accounting system that you can pull at month end or any time to check that, okay, these accounts are overdue, I need to collect money. I need to start calling people to pay. The accounts are not collected. Or when you know that, okay, then creditors also on accounts payable will come knocking on your door. Hey, you didn't pay this. Next time you need a stock, they say, no, we cannot supply you with this because you don't pay your accounts on time. We have suspended your account. So imagine you don't get stock or stock to produce. So your business is prone to failure because of that, because there is no source documents to efficiently run your business so that you can keep track of all your expenses, your income, and also do collection and everything. The business is prone to fail. And also it helps you with budgets. You see, you have to budget with those recording, financial recording and source document. You have to records, and as you put the budget, you see the actual, what are you spending versus your budget, and also the coming year projections, you see, and also the costing to know that what your inputs cost in the business, your expenses are.
Yeah. Speaking of costing, so how does costing come into play in our business? How does costing affect whether or not the business grows? Maybe elaborate on that for us a little bit, Mr. Mokoka.
Cost actually, you must be able to work according to your budget or your cost. If, as Pochia said, that you need to produce a cake, you need to know all the ingredients that goes to produce a cake. So you must have those production costs that are there. Those are the direct costs that Pochia was talking about. Then you know that you have to be able to recover, because if you don't recover your cost, then your business will fail because it won't be profitable. And also those fixed costs, things that we normally call overheads and whatever. And as Pochia says that, and also last time I say that you need to pay yourself also. Even if it's not in a cash form, but it will go to your equity. Sometimes you can turn it to an equity if business, but in order to keep records of everything, to know that, okay, you must include all the costs, including your salary, so that you can be able to properly cost your products, so that you will be able to make profit. Without that, without also managing cost and cost controlling of your business. Because cost controlling is all about, you need to improve. You want to check what are your cost drivers, what are the things that you spend more, where can you cut in order to be more profitable and to be a competitive edge against your competitor, because you are bringing efficiency into your business by controlling costs. Because as I've said before, and what I've said, that cost goes before profit. So there's no profit without cost. Those, as they always say, that those that don't want to lose, as in economics, those don't want to lose will never gain.
Yeah.
And also costing, it goes back to that thing that you have to check, how much input do I put into my in my production line? Because also in economics, it doesn't really, in most cases, what I have to say, especially small business, in order to fail, is that sometimes you can put more input into the business and doesn't really relate that the more input you put, the more profit you're gonna get. Because sometimes if you put more factors of production, you keep on pumping and pumping other factors of production, others remaining constant. It's like when you plow a 1 hectare field. If you keep on putting manure, yes, first year you might get a bumper, a crop, and get a lot of maize coming out. But you put more. There is what we call the law of the marginal return utility, where it starts your production or your product rate and your product start to increase, but at a decreasing rate until it gets a plateau where it doesn't, and after that it goes down. Because you can imagine if you have a bakery or a cake producing business, if you only need 2 staff to produce that cake, and you see that, okay, demand is high, let me add another personnel into this, or add another machinery. It all depends. Will these 3 people, if you are adding 3 people but you're only having 1 machine, there's going to be a friction. So there's going to be an input wastage.
Yeah.
So costing is all about that. You know, you balance your inputs, what you put into business. You always balance it so that you get your cost factors right, and then so is your profitability, and you bring efficiency into the business.
Mr. Mokoka, there is so many questions in the chat. I'm going to see how many we can get to. But one of the first ones here is, if I were to outsource a bookkeeping service, typically what would they need from me, considering that I haven't been doing well in recording up to now? So if somebody now decides, okay, I've messed up, I haven't been keeping good recording, and I want to outsource to a bookkeeper, what should they have ready with them as they get into that discussion?
Firstly, they just need to have if they have a bank account. The first point is to get a bank statement, a detailed bank statement for the period. Go to the bank, get a detailed bank statement. That's why I always advise keep personal things away from that thing. So if you have, and you always emphasize on buying using that business card, not cash in most cases, because once you withdraw, you forget what you have done with the money and all those things. So if you put that thing, the bank statement will be the first document that we can go through and try to determine what were your expenses and what was your income. You see, if you really, when you receive money, you do bank it into your bank account. I encourage people to encourage their customers to pay them through the bank, deposit into the bank, so that even if you don't keep records, we have that thing that we can start to work on, the bank statement.
Yeah.
Okay, have you spotted another question there?
Yeah, I think it was Itumeleng, and I think we once talked about this under financial recording also. Sir, is there a better way to keep source documents safe, especially the day-to-day slips, as the ink fades as time goes by?
You can. There are better ways to put it now with technology, and with technology you can scan them, put them there, and put the record of them, file them, scan them, create a file and whatever on cloud or whatever, where you know that you've got a certain file on cloud, and also use an accounting software. There are banks that also provide that service free of charge. I know FNB's got it, where you get an accounting software. You see, this financial recording, sometimes you can use manual or use a computerized one. You see, so really it's your choice. But I will encourage now with the digital age, there's a lot of systems that are there, accounting software that you can have free of charge. You just have to check them. There are some are on clouds, and then also the bank. I know FNB is giving that, where you can create. They can also do invoicing for you, and it's got an invoicing part, and where you can record all your transactions. So it's very vital sometimes to put those things, because they fade over time. If you don't have, you cannot scan them. Make a copy of that one, attach that one that will fade. because in my experience, those photocopied one don't really fade. So you can keep them safe and just get a file where you separate it by month, that okay, this is year 2022, January, you file them there and you put them safely. And not put them, as I've said previously, don't put them in a box of shoes.
Great one there. I think there's a lot of discussion happening in the chat with regards to the softwares. And so guys, I think I want to encourage everybody to start looking at that, start researching, and perhaps in the Facebook group, we can continue this discussion. And so if you come across some great softwares where business owners can keep track of those source documents, especially things like slips, let's share that in the Facebook group and continue the discussion there. Unfortunately, it's one of those that we can't continue going on with over here and on this platform, but that's the reason why we have the closed Facebook group, to continue these discussions. One of the other questions that came through, Mr. Mokoka, is can I charge a fee for consultation and quotation requests, especially because of the fact that so often people will request quotations or you'll do some of the work and then they just don't confirm and you've put in all this work. And maybe one that I can just add to that is I need advice regarding making agreement of non-refundable deposit, because recently I took 2 orders from people for cakes. They didn't have cash for the deposit, and then I went and I bought the ingredients and decor, and then on the day that I should start baking, they postponed, and so it was a loss. So maybe you can speak a little bit towards those 2 issues for us.
Yes. For quotation, it all boils down of which industry that you are in order to charge people for quotation. In most cases, the norm is that in most cases, quotation are free because it's part of marketing, you see, because people go to another competitor and what. But it all depends on which industry you are, whether to charge a profit. But in most cases, when you are in a production or you produce things like cake, bake, you can't really charge them. But I know that like people in the construction industry, some of them, they say, because I'm gonna come to you, do and check and everything, for professional services, that it all boils down that you must study the market where you are, whether you can charge it or what. I know is very, but in business, we are here in business, we are in business to do other things. Some of the things are just sunk costs, are just fixed costs, that unrecoverable costs that you will have to incur as a business. But it depends on industry to industry. But in most cases, the normal thing is that quotation is for free. It's part of your marketing tool, you see. And then you can also put that, okay, given a quotation, make follow-up. Sometimes just sending a quotation and not making a follow-up, people do lose interest. So keep that. In my own experience is that after putting in a quotation, go back to the client, try to discuss whether is it within the range or what, where can we cut the cost and what. Try to, so that you build interest and also you are marketing yourself. They see that you do care. You see, you do look after your customers or your client.
Mr.
As for the last one, the last one was?
The last one was about non-refundable deposit and getting those agreements because of people not coming back. But I think you've already touched on it. Maybe a more important one, and this is one that you also have mentioned quite a little bit, and so it raises some questions, is can you maybe elaborate a little bit on allocating costs to equity versus maybe a loan account owing to the business owner? So you've mentioned so often about equity, so just elaborate on that for us.
In essence, as an owner, you cannot, unless if with your business, you have made a loan to the business that is payable back to you with interest, you see, then you can attach costs that, okay, I'm loaning my business so much, but according to the market rate, if I give you 50,000, I'm going to charge you as per what the bank charge, you see. I'm going to charge you the interest rate as per market related, or I'll charge a little bit lower, you see, as a loan to the business. But in most cases, an equity is something to do as a business owner. You want to show you have confidence is what you plow in, expecting to get profit. It will be your payback. You see, You must work hard so that what you have put as part of your equity will be paid back to you in profit form. So by working hard and managing your business efficiently, ensure that you make profit is what you get as the reward. You see? So you cannot really say that my equity, I want to charge it. Yes, unless you give a business as a loan.
Got you. I think so many comments coming through saying this session is so eye-opening. Everybody in the comments are saying, thank you, Mr. Mokoka. What wisdom is coming through. So I'm going to ask you to stay with us until the end. Depending on how quickly the group activities go, we might have a few more minutes towards the end just to ask one or two more questions. I feel like most of us could speak to you all day, but we don't have that luxury on the webinar today. But thank you so much, Mr. Mokoka, for sharing with us as so openly as you always do.
Yeah. Darren, I also wanted to just say, I mean, we've got two groups. We've got a WhatsApp group for everybody, and then we've got two other WhatsApp groups, that's Group A and Group B, with their coaches. So guys, I know there's a lot of questions. Please speak to your coaches, and then they can answer your questions, because we don't have enough time. Yeah.
Great. So let's move on. And I know that it is now time for the group activity. Portia, over to you.
So guys, you know, all the time, we've got 15 minutes to go through our activity. So in your groups, you're going to choose one of the week goals. So maybe move from that slide and just show the 4 week goals. Yeah. So in your group, you choose one of the week goals below, and you turn them into SMART goals. If you remember when Darren was explaining the SMART goals, he talked about SMART. So we want you to do that. Make these goals that are there on the screen, make them real SMART goals, not weak goals, because now they're weak. So what we're gonna do, it's like, I'm going to get fit. That's a weak goal. We don't know how you're gonna get fit, how you're gonna do it, with who, how you're gonna measure that you are getting fit. So we want you to change those goals. So group 1 and 2, please, the leader, please take note, that's your goal. Group 1 and 2, I'm going to get fit. And then the next goal, I'm going to be an entrepreneur. Group 5 and 6 will do that. So all the leaders just make sure that you just write your goal. And then we've got, I'm going to help my team land more sales. That's group 3 and 4. And then I'm going to Cape Town. It's group 7.
How much time are we giving for the activity?
It's 15 minutes. Yeah.
Okay, so 15 minutes of discussion, and then you'll be brought back in. We'll do feedback, and then we'll wrap up today's webinar. All right, looks like we're about to get everybody back into the webinar room. We'll give it about a minute or so. Yeah. But welcome back, everybody. Let's get straight into feedback. Please remember to keep your feedback short. Stick to your 2 minutes. Yeah. No more than 2 minutes. If you go more than 2 minutes, we're going to start singing "Ayo Matata" to cut you off. Okay, Portia, back to you.
Okay, I had the liberty to just go to every group. You know, I went from everything. Yeah, so it was just nice to see what people were doing. Very interesting. So I'm gonna just say, okay, the leaders, people who are presenting, you know yourself. Hi, Monakhe.
Yes, this is Monakhe Malau. I'm from Davidson, and I'm representing Group 1.
Are you able to switch on your video? It'd be nice to see you, Gift.
Yes.
Thank you.
Here we go. Please go ahead.
What we chose, the topic of ours was "I'll get fit." That was the week decision. So, as for the one for SMART, I'll elaborate it more as it goes. As for S, it's specific. So the person mustn't say "I'll get fit." It must be specific by saying, at least you know that you will get healthy and you wanna get in shape, and you are looking forward maybe to lose at least 30 kg.
Yeah.
To M, as for measurable, you can say at least I want to lose 20 kg, or 20 kg maybe after every 2 weeks, or let's say 3 kg after 3 days. As for achievable, we said I lose weight and I want to get in shape. That is what you want to achieve. As for R, he said you're gonna stick to your plan and you must make sure that each and every time you stick into your timetable, and you must stay consistent. And as for T, it say that you want to achieve your goals after 20 weeks. Thank you.
For a while I was thinking, you know what I was thinking? I was like, if I can lose 20 kgs in 2 weeks, please give me that SMART goal. I got so excited. I'm like, okay, yeah. But at least now we know how you're going to do it. You want to lose the weight, and we know how much you want to lose and by when, you know. But I just felt like maybe on the time bound part, I feel like you said 2 months. 2 months to lose 20 kgs might be unrealistic, guys. So remember, when you're setting these goals, this is real life. I want to lose weight. I've been struggling with weight. There's no way I can lose 30 kgs in 2 months. You know, so let's be realistic when we're setting our goals. But this is a nice example because that's what I'm saying. I like these examples because there's no right or wrong, but this is just one example that shows you that you might just be unrealistic. So you could say maybe in a year or 6 months, I want to lose 30 kgs. And then in a week, you know, to be relevant and to be realistic, I can lose 2 kgs a week or 1.5 kg a week. You need to remember realistic so that you can achieve your goal. All right. Okay, thank you very much, Gift. That was nice. But at least I understand it's specific, it's measurable, it's time bound, it's probably just a bit unrealistic, but I still like it because at least now we're clear. Because if now you guys give me your goals, your goal action plan, I can say, this is unrealistic. Let's change the date or let's change the kilograms. All right, let's move to room 2.
Okay, thank you. So under our specific goal, we wrote, I am going to get fit this September. Under M, I am going to walk and run weekly around the block. In terms of attainable, we're gonna run 5Ks a day for 3 hours in the morning. Relevant, getting a healthy lifestyle. Under T, 30-minute session daily. Yeah. We are going to start everything month end.
Oh, okay.
Yeah.
And then when do you want to get fit? What is your time, your limit? When do you want to get this done?
Okay, for a month. We want to get fit within a month, starting from September month end, perhaps reaching to October month end.
Okay, so how much do you want to lose?
About 100K.
Hi guys, can you please be realistic when you do your goals? So
Okay,
be
maybe,
realistic, guys.
20.
Remember, when you're losing weight, you can't do it in a month. There is no way. So remember your goals, even when you're doing for your business. Just be realistic that, okay, I want this done, but give yourself time, like 3 months, 6, you know, but there is no way. That's why they say the goals need to be realistic. There is no way you can lose 100 kilos and oh my God, you're losing yourself as a person at 100 kilograms.
It's so hard
to yourself, your whole body, yeah, your whole body and more. Okay, all right, that's a nice example. I like these examples, guys. Even if you didn't do it right, but it's just teaching you that you know how you need to set your goals. It's fine, Pauline. Let's move to room 3.
Hi everyone.
Hi, Itumelang, I can hear you laughing.
Sorry, I couldn't help myself.
All right, it's nice.
Well, it's Itumelang from group 3. Our choice was, I'm going to help my team land more sales. And how we came about to deal with this, we said, we looked at where we are. Our weekly our walk-ins are 5 people per day, which we sell 1 item. So we decided we're gonna help our team reach 40% more sales in 5 months. And how we're gonna do that? We wanna reach a point where there's 3 items that we sell with an increase of 10 walk-ins in our shop. And how we're gonna do that? We'll be doing increase on our marketing by supplying more flyers, and then doing promotions where when you buy 5 items, you get 5% discount. And then we also do paid adverts on social media. And then I think that's it. Although I can't break it down to say what's attainable and relevant.
I think for me, I would understand it. If I was your employee and you gave me this goal, I would know exactly what to do. So that's the plan. I like it the way you put it. It's only that I don't know if did you say when, or you said 5 months. So you know that in 5 months time, this is what that I like the way you put it. You know, it doesn't have to be as the way you didn't put it in chronological order, but I still understand it. If I was an employee, I would get it. That this is my boss is saying we must do this, and this is how we're gonna do it. All right, we're gonna do flyers, and we're gonna do it in 5 months. We wanna increase our sales 40%, and then also there's this the walk-ins. You wanna increase them by to 10, because at the moment you're having 5, and I can see also there was 1 sale a day. Now you want 3 sales a day, so that's clear. Yeah, very good. I like that.
Thank you.
It's also realistic. You're not saying I want 100 sales. You're just saying I want to increase my sales, just like a two extra sales, but also I want to increase my walk-ins, by 50%. Yeah, so I like that. Yeah, that's great. Let's move to room number 4.
Good day, everyone. My name is Bafana. I'm from Group 4, all the way from Brakpan. So our topic we chose going to help my team land more sales. So our specific, it's how specific our goal is. Selling our products online. We are introducing a new way. We're gonna be marketing our products and the hoodies that we are selling via social media. So our measurable goal, the goal is to create a Shopify online. So our achievable, I have an experience in graphic designing, and then we also have someone whom has the experience and qualified as a digital marketing designer with a full understanding. So our aim is to sell 10 hoodies a day and get them delivered to our customers. So our time bond, Shopify will be built within a period of a month to 2. Latest is to enroll into a second month. So our customers will be able to receive their product within a day, 2 days to 5 days, 2 to 5 working days. Thank you.
I'm happy.
So am I. Shout out to Group 4.
Yeah,
Nice
shout
one,
out to
Group 4.
Yeah, I think landing the sales, I think it's because you guys are business people. You know how to do this. It's just that, it's always in your head. So the only thing I think we need to learn is to just put it down on paper. And I think for the people who attended the group coaching sessions, they know what I'm talking about, because we did this goal setting on the 19th. And some of you, I think you've done your homework also on that. So please, guys, use those sheets. They're very good. But I also like how you did your SMART goal. It's very clear and concise. I see Nomfulo is excited there. Yeah. All right, let's move to group 5.
Hi, Coach. Yeah, Simon here. I'm representing group 5.
Yes, Simon.
Hi. Okay. Our week goal is that I want to become an entrepreneur. So we've decided as group 5 that just to say I want to be entrepreneur is not good enough. That is why we came up with the idea that before you become an entrepreneur, right? So you must get that, come up with that idea that is feasible. And then regarding that, that's why we come up to that, our specific goal, right? So we want to sell t-shirts. Our goal is to sell t-shirts, right? And then our measurable goal, we do want to see ourselves selling 1,000 t-shirts within 3 months, right? That's our measurable goal. And then by doing that, we will obviously need tools to produce those t-shirts, and we'll obviously need labor. Like, we'll work on this thing, like we'll hire people, and we'll also take part into this production. And we'll obviously need to say, okay, by selling these t-shirts, we'll look if we'll summer and winter. Obviously, we'll sell golf t-shirts and long sleeve t-shirts. Well, that will depend on season, which t-shirts we sell. And then we'll obviously take orders, like to make sure that we deliver to our client on time, so that they get their orders on time. And by doing that, we'll obviously advertise our products on social media, and by also, of course, by word of mouth. Okay, that's it from Group 5. Thanks.
Yes. Yeah, straight to the point. And I think, you know what, you covered everything. It's only that I think if we have the sheet, the goal sheet, it will be easy, like, to put it down nicely. Yeah, but I liked it. Everything was covered. Let's move to room 6.
Hi guys. I think I'll be representing room 6, even though I was not the team leader for this weekend, because we had a problem with the network, so they couldn't fully participate. But we are group 6. My name is Kwabane, and then our topic is I'm going to be an entrepreneur. Okay. Obviously, the specific was to be an entrepreneur. So as a specific, I have to start a restaurant. I decided to start a restaurant. I had to put a business plan in order. I had to register the company, and I also had to generate the capital. Okay, it's my goal measurable. Okay, if I have a business plan and I have registered my business, I think I know what I want and what I need. Is it attainable? Given I have secured capital and I've jotted down the business plan, I think it is attainable. Realizable, given the vast experience I have and the need I've seen for my product in the market, and also because I want to generate an extra income, and I'll have time to actually run the business. So I think it's realizable. Is the time bound? Okay, I want to start my business as soon as I am done with everything, getting everything in together. So time bound, I was not really specific about time, but I think as soon as I've purchased all the equipment and the inventory, I'm ready to start.
Yeah.
Thank you.
Yeah. So you see, Kwabane, got it all there. You see, when you put a date on something, it's easy to achieve it, because you know that on the 30th, I've got a deadline, I want this done. So it will encourage you and motivate you to actually work faster to get to that goal. So make sure you do put a date. Put dates on all your actions. You know, remember also, even if we have a date, and I think that for the guys who had the group coaching, I made a nice example for you guys. I said the long-term goal, you might have a date, time bound, but all the little activities, you can still have little dates that you have there. But I think it's important to say when you really want to achieve the goal, you know, the main goal. All right. So make sure you do put the deadline for yourself, because then that will push you, because you know that the 30th is coming. All right. So make sure you do that. Yeah. And then let's go to room 7.
Hello guys, this is Christiana representing group 7. Our week goal was going to Cape Town. So as specific, we said would be a vacation would be a vacation for 7 days. M is the goal measurable. We say we'll do a research about Cape Town's weather, the places which are there. contact the travel agents for assistance. A. Achievable. We save money for months before the trip. Do bookings for accommodation. Create a daily schedule. R. Relevant. The trip will be on summer and to be able to explore the weather and all the business activities going on in Cape Town. T. Time bond. It will be a 7 days trip from Monday to Saturday. On the starting, yes.
Okay. Yeah. So, yeah, you know what? I thought you guys would be so excited with a trip to Cape Town, guys. Where's the excitement? You know? So I'm saying, I understand where you're going. First of all, Cape Town is big. You have to be specific to where you're going. You know, you can say I'm going to be choose a place in Cape Town. Be specific and say, when are we going? These are the dates when we're going. Because it's very warm in Cape Town, this is what we're going to pack to get to Cape Town. Actually, this exercise, that going on a trip, is actually the most popular goal. You know, when people make example, they'll say, if you want to understand SMART goals, just plan a trip. All right. So this is what I'm gonna pack. This is when I'm going. This is where I'm going, and this is what I'm gonna do when I get to Cape Town. And I'm going on these dates. That's it. Yeah. So I wanted some excitement there, but I think you guys get it, eh? If you're planning a trip, you need to know how the weather is and where you're going and when are you going and how much do you actually need financially to actually make this trip happen. Yeah. So I think that I'm happy with everybody. Thank you so much, Darren.
The excitement for the vacation was in the chat.
Oh, I see somebody there. We
vacation
decided to
Cape
go
Town.
on a vacation and winery tasting. Yeah.
Yeah. Great. Thank you, guys. Thank you so much for your participation in the groups. As always, great feedback coming back there from all of the groups. And I hope that above all that you've learned from the discussions and of course learning from the feedback that everybody has shared. We need to wrap up today's webinar, so we're going to move quickly. A reminder that there is a survey that will happen at the end of today's webinar. So please stay until the very end. Today, we're not going to be able to say goodbye. We will simply end the webinar and then there will be a pop-up on your screen. All right, so please make sure you look out for that pop-up and then complete the survey, couple of questions and submit that at the very end. All right, another reminder is please don't forget that you will be contacted by Greenhouse, who is our monitoring and evaluation partner. Please let us work with them so that we can have a successful journey together. Complete the questions from the link that will be sent by Greenhouse. As a tradition, we may please open our videos to take a picture next up. Okay, so we'll do that shortly. So please, guys, look out for the survey coming from Greenhouse as well in the next couple of days. Our next webinar is on the 23rd of September. So diarize it, save the date. That's in about 3 weeks from now. Make sure you are here, same time, same place, from 10 to 12. It's a Friday as usual. And the topic is going to be financial calculations. Profit margins is what we're going to be talking on. And so you don't want to miss that one. Make sure that you save the date and make sure that you are here for webinar 5. Also, don't forget there is homework assignments. Portia will elaborate on that. Coaching coming up, she'll talk about that. And then, of course, as usual, the recording is available. It's going to be on the Facebook group as well as the website. So please make sure you do that. And then if you have any questions, remember that you can chat to Nokupila at drivenentrepreneurs.co.za. The recording of the presentation will also be available on the WhatsApp group and the L+EARN Facebook closed group. And remember, as I mentioned earlier on, the Facebook group is really where we get to continue the experiences that we have on the webinar here. And so feel free to post questions, feel free to ask questions and to share feedback in the Facebook group as well. Portia, do you quickly want to touch on the assignments and coaching?
Yeah, guys, please, we need your homework. And remember also there's incentives. If you send in your homework, attending the webinars, you will get those incentives. But most importantly, I just wanted to also make you guys aware, we're supposed to have our one-on-one coaching sessions from the 5th to the 9th, but we feel like it's very close, so because we want to plan properly. So we're gonna have our one-on-one sessions from the 12th to the 16th. So just wait for a link, or maybe Nokupila will contact you and me on when we are going to have those individual coaching sessions. And we've got the group. So I'll speak to my group. Nopila will speak to her group. So please, guys, can you please attend these sessions? Even the group coaching sessions. I know the guys who attended, they benefited a lot. They even wanted groups to be formed. So please, guys. And then your homework, can it please be in, I think on the 10th, if you can try the 10th. Make sure that you send your costing sheet by the 10th so that you've got everything prepared for your first coaching session. Yeah.
Mr. Mokoka, we're going to give you 30 seconds to leave us with your parting message to all of the entrepreneurs and business owners on today's webinar. What is your final words to everyone on today's webinar?
Thank you, Darren. My final word is remember, always keep records, and that cost goes before profit.
Great. Thank you again so much for joining us. I think we've learned so much. I'm really hoping you'll even come back and join us for one of the future webinars. It would be great to have you interact with us again. But so far, you've done a sterling job in the last 2 sessions. We've absolutely learned so much from you. And thank you from the bottom of our hearts for giving your knowledge and sharing it with us so openly. That's Mr. Mike Mokoka, our guest speaker today.
Thank you very much, and thanks for the good work.
Yeah.
All right,
and guys, just remember, guys, the Facebook group it's a closed one, and it's called L+EARN BIZ.
All right, we're ready to wrap up today's webinar. Thank you everybody for being here. Let's get everybody put your cameras on. We're going to do our group picture, and then we'll end today's webinar. And please remember that you need to complete that survey. So I'm going to stop sharing the screen. Everybody, videos on. Make sure we can all see each other.
Can I put my lipstick on?
Do that if you need to. Get those smiles out. Make sure we all here. You guys are such beautiful people. So good to see everybody. I want to get ready.
Yeah.
It's been an amazing session as usual. We've learned so much, and what an absolute pleasure. Remember, it is Money Smart Week South Africa, and so there's tons and tons of great initiatives happening. And again, thank you to the Asisa Foundation for bringing today's session to all of us, and first just for creating this really, really fantastic program. And so let's get everybody to get their videos on. Ivo,
and
we
if
can't
you want,
see you there.
And Darren, if you want to know more about Money Smart Week, just go to hashtag MSWSA 2022. Please go there, and then you'll find so much information about finances.
Great stuff. It's been an absolute pleasure being with you for the last 2 hours as usual. It's the beginning of a great new season, and I hope it will be a new season in your business as well. See you on the 23rd of September. Remember to complete the survey as we say goodbye and the webinar ends. Goodbye, everybody, and we will see you soon. Don't click leave. Don't click leave. We will end the webinar. Bye-bye.